Dollar could be a crash risk if US losses credibility, analyst warns. The US dollar began August with a bounce after suffering its worst monthly fall in just shy of a decade. But it did little to dissuade bears who are looking for further weakness in the greenback. We expect the currency to be undermined by an ebbing of safe haven flows, a reduction in the US rate advantage, and political uncertainty ahead of the November presidential election, wrote Analyst at UBS in note last week. The ICE U.S. dollar index DXY 0.03%, a measure of the currency against a basket of 6 major rivals, fell 4.2% in July, its biggest one-month decline since September 2010. According to FactSet data, trading Friday at its lowest in more than 2 years, the index caught a 0.3% bounce on Monday to around 93.599 data last week from the Commodity Futures Trading Commission. Meanwhile, showed that the dollar is well out of favor with speculative traders, a factor that may have left the currency ripe for at least a near-term bounce. Extreme speculative positioning is often a contrarian signal. But what may be unnerving over the long term, argued Stephen Barrow, head of G10 strategy at Standard Bank, is that the dollar's weakness versus developed currencies comes at a time of heightened global uncertainty surrounding the COVID-19 pandemic. Usually the dollar behaves a bit better against its developed economy peers during a crisis, he said in a Friday note. Barrow worried that the combination of rising economic and political uncertainty amid the COVID-19 pandemic and ahead of the November presidential election could pose a crash risk, a danger more often associated with emerging market currencies. Why the danger? Barrow argued that rate cuts and other easing measures by the Federal Reserve and the drop in Treasury yields to or near all-time lows has significantly reduced the US rate premium versus other safe currencies. But what's really important, he said, are other factors like the liquidity of assets, particularly government bonds. The near freeze up of the US Treasury market at the height of the coronavirus crisis earlier this year marked a bit of wobble, he said, which could be a problem if it makes traders and investors reluctant to head for treasuries in the event of another risk-off event, a development that would allow the dollar to suffer. There are other factors that could lead to dollar weakness as well, but the underlying question is, can the dollar be trusted, he said. For if trust has disappeared in the US economy, policymaking, election, credibility and more, then the dollar could be in for a slump, at least against other major currencies. Information and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.